morning, everyone. Thanks for attending the workshop. So first, let me introduce myself. My name is Carlos. I work for ConsenSys. And basically, I got involved in the space in late 2014 by stamping documents on Bitcoin blockchain. That was how it kind of started. I had a startup back then, and using DocuSign for a startup wasn't that nice. So that's how I kind of run and started working with the blockchain technology. I was more into the applications of it, not much into the crypto space. So no, I don't hold a lot of Bitcoin myself. But when I joined, it was like $95. So yes, I regret it. And it's been interesting because the space is very dynamic and everything. So I've been involved, and definitely from there, I ran into Ethereum, which is a technology I mostly work with. And the opportunity to build applications on this different network settings, a distributed network with self-sovereign identities, and many of the other applications that you're probably familiar with, was amazed me. So that's how I got involved. In about 2 years ago, before that, yeah. So I want to kind of, before I introduce ConsenSys, I want to kind of give you a little bit of a framework of there's another world besides cryptocurrencies. It's everything, applications that run and live on the blockchain. So you're probably going to be hearing about three big names there, or three different technologies or platforms. There's Corda from R3 that it's probably very vertical to the finance sector. Then Hyperledger Fabric, which is part of the Hyperledger Foundation. We were yesterday in the workshop, and it's mostly the main contributor is IBM, and there's not the only project, but probably one of the most used or renowned projects within the umbrella of the greenhouse of the Hyperledger. And then we have Ethereum. So Ethereum, the main contributors, you're probably going to hear about Ethereum Foundation. I don't know if Vitalik Buterin's name sounds familiar to you, but he's the one that wrote the white paper for Ethereum. And so 9 people founded Ethereum Foundation, and one of those people is named Joseph Lubin, and he founded ConsenSys. So we work pretty closely with Ethereum Foundation, but if I would have to kind of, because we collaborate a lot on different topics, but if I have to say, Ethereum Foundation is mostly focusing on the infrastructure level, protocol, and mostly on the public blockchain, perhaps. And ConsenSys, we're building the applications and tools that run on top of that blockchain for enterprises to leverage, or for developers or anyone on the space that want to build something on top of the blockchain. And as you know, there's our enterprise consortiums. There's Enterprise Ethereum Alliance and Hyperledger as well, that probably are like the main names that you're going to be hearing in the blockchain space for enterprises. So ConsenSys, like I mentioned before, is we do definitely a lot of different things, but we're mostly trying to do is to build the infrastructure for the applications that are going to be running, the infrastructure and applications that are going to be running on the blockchain. I don't know to how many of you those names on the left sound familiar, but Infura, Truffle, and MetaMask, and many of the other tools developers are using our ConsenSys. But we also have MythX, which is a security scanner, a security application or tool that would scan for security vulnerabilities, your smart contract codes, so that you could deploy them and be a little bit more aware of if there's any issues before you actually put them on the blockchain. Pegasus, actually, if you were here yesterday, you will have heard of Hyperledger Besu. So Pegasus has built Ethereum client based on Java to run, to deploy networks with permissioning, privacy, and scalability to be able to run and meet with the enterprise requirements for leveraging blockchain technology. Kaleido is it's a cloud platform for blockchain. So you could deploy blockchains on the cloud infrastructure. It also runs on Azure and AWS, but you could also directly use it on Kaleido on their own page. And Truffle, you're going to see it working later in the demo, so I'm not going to talk much about it, but it's a development framework. And OpenLaw is a tool for signing and everything and managing legal contracts on the blockchain. So those are some of the tools that, for example, ConsenSys has built, and it's developing and putting out in the space. within ConsenSys, like I've said, we do many things we build. There's consultancy services, there's security audit services, there are a lot of products, and of course, there's also the educational arm, ConsenSys Academy. That's the part of the company I'm from. And basically, what we're trying to do is grow the ecosystem by ensuring that people who is from the business side understand the technology enough to identify business opportunities, and people from the technical side has the skills to build applications that run on enterprise level environments. And we have certifications if anyone wants to get certified, and we also have like different trainings, blockchain essentials for like anyone to understand the technology, blockchain developer program for those who are technical and they want to like learn, and the Libra. So there's a Libra training that we do that you have, and the demo that we're going to do later, you're going to do a bunch more there and understand get a deeper dive on that course. I think it's probably like a 2-hour thing or something like that. I don't recall exactly, but there's available. And if you use the decentralized discount code, you'll get a 15% discount on everything that we have there. There's a bunch of free stuff, but those courses they have a price. So yes.
Quick question: the Ethereum business professional, the developer courses are self-explanatory. What is a business professional in Ethereum?
So the question, just to repeat, she's asking about the EBP, Ethereum Business Professional. That is our certification exam for people who's mostly, let's say that exam will allow you, let you know that you understand the technology enough and its implications and its use cases so that you could identify opportunities for business applications. It's not technical. It's for someone who perhaps is a product manager, innovation, or business leader who it's getting into the blockchain space and would like to have a credential that say, yeah, I get this space.
And do your certification exams also include some training, or is there a training that I can take to pass the
Usually,
EBP?
yeah. The blockchain essentials will be with the EBP, blockchain developer program with Ethereum developer and smart contract developer.
Makes sense.
All right. So what we're going to be doing today, it's a bit of a 2-hour thing, so let's try to make this as friendly as possible, in the sense that they're recording, so we are going to try to keep maybe questions to the end. But if there's any pressing thing, don't fear to stop. Just ask for the microphone because they need to record the audio. So in the first session, we're going to talk about a little bit what is tokenization on the blockchain. We're going to talk about some applications and use cases, of course, about Libra, talk a little bit about it, but also about interbank payments, for example, and different ways how you could set that up. And we're a little bit about where business opportunities for blockchain technology in this cases make sense, because in a lot of the trainings and the things that we do, most of the issues companies are struggling with is actually identifying a proper business use case for blockchain. And sometimes a lot of the ideas we hear at the beginning, they either need some changes or they don't make sense on the blockchain. So it's not as trivial as you would think to actually identify a blockchain application. So questions and answers, and then we're going to make a small break of about 10 minutes. Please try to keep it, because this part, I know how long it's going to last. The demo is always like a surprise. So the first thing, we're going to do a demo of Libra. I'm going to show you how to run it, like install it, put it, and create an account and make a transaction. So you could see how that goes and how it happens. Hopefully it will work. If not, I brought a lot of contingency plans, like a video, or I already had to set it up in another environment, which is funny because I didn't do that for the Ethereum part. So either I'm too confident of it, or I may be a little bit too bold. So for interbanks, it's the same thing. We're going to kind of, I don't know how, we're going to discuss a little bit later, but how many of you have heard about the RC20 token standard? So we're going to launch a token, and we're going to play with it, how could a bank be using it? Because there's some of the use cases that kind of leverage that similar standard for interbank payments. So we're going to kind of, using a little bit of our imagination, because it's going to be deployed right here. We're going to play and try to see how that would look like. And at least for you to understand it. And then, of course, questions and answers. All right? So that's a little bit of it. And so I'll try to go on this around, we started a little bit later, so probably try to go to 35, so we have a good 5 to 10 before the break to ask questions. If I go too fast or something, please, let me know. All right, so let's get started with tokenization and blockchain. So the first thing I want to ask is, who would tell me what is blockchain first biggest disruption? If you would have to say what was it, what would you say? What would you answer to that question? Yes.
Regulation.
Use the mic.
Regulation.
It will disrupt a little bit how regulation is done, I guess, but no, there was something before that. Before even they thought we're gonna transform the world.
Centralization.
Yes.
Centralization.
It's kind of on that, so I'll just, basically one of the things is that, blockchain, for me, it avoided the copy-paste of the digital realm. Everything that is digital is subject to be copy and pasted. And so if you want to have something digital and you don't have a way to someone to make sure that that has not been copied and that it's true, you will always remain to have a third party. However, with blockchain technology, it added the ownership piece to a digital asset or a digital whatever. So it's not, even if someone has your Bitcoin address or your Ethereum whatever, if that's not registered, it's owned under you, they cannot do anything. That's as simple as it sounds. But that revolutionary idea and that very important disruption introduced many applications and different things, and one of them is tokens. So as you all know, tokens could stand for any digital or physical asset. It could be a house, it could be a car, it could be a diamond, it could be IP rights, it could be anything, it could be a picture, it could stand for almost anything you could imagine. And despite the fact that people are not, now we're using a lot of terms here that people are not as familiar, we're all used to tokens, even if you don't know. How many of you have gone to a movie theater to see a movie? That's a token that grants you access. The difference is if that tokens fall out of your pocket and I find it, I could just pick it up and go into the movie for you. If you do it on the blockchain, even if for whatever reason I have that, I will not be able, because unless you transfer that to me, you will not be able to prove that you're the owner of that ticket. Therefore, you will not be granted access to the movie. So that's as simple as we are. We've been interacting with tokens all of our lives. It's just that we're not as familiar, and we don't call them token anymore. So we call them ticket concerts. We call them airline miles. We call them different ways. So the next thing is, because we have this ownership, it introduces cryptocurrencies, which probably is what most people is familiar with. And then you have Bitcoin, Ethereum, Litecoin, and many other coins out there. That basically is a kind of token that stands specifically for economic value. It has economic value, and that's its main purpose, and that's its whole differences. However, because with all the things that are happening around the crypto world, it has a lot of volatility and a lot of different things out there, a new concept emerged that probably was not as familiar as we perhaps have other things out there, which is the stable coins. And stable coins are something that is pegged to, let's say, another asset that is less volatile, so that you're able to have the properties kind of a cryptocurrency or a token on the blockchain, but not subject to that much volatility. And you have heard of DAI, you probably have heard of Tether. And here's another question I have for you, since we're going to talk about Libra. Is Libra cryptocurrency, or is Libra stablecoin? Because if you've seen the headlines, they talk about Facebook cryptocurrency. So please raise your hand if you think it's a cryptocurrency. Good. Raise your hand if you think it's a stablecoin. Exactly. That's where Libra is. So despite that it's being talked about as a cryptocurrency, to more technically speaking, is more of a stablecoin. So because it's pegged, it's going to be on a reserve. We're going to talk about it later. So I don't want to really get ahead of myself. So this whole new, yes.
Would it be very hasty to characterize Libra as a next to be fiat currency?
I'm sorry?
Would it be very hasty to characterize Libra as the next fiat e-currency?
I mean, again, it really, I would say it is not it's not a currency or kind of a fiat, e-fiat currency, because it's actually pegged to currencies, to fiat. If you see US and all that, they're pegged to gold. So if you would like to be a little bit more closer, you probably would have to work a little bit more within the framework of a fiat currency so that you could be called an e-fiat version. So I would still be saying it's more of a stable coin rather than an e-fiat or a digital money version. If I would have to say probably now something that is closer to fiat are actually more traditional cryptocurrencies than that. All right? So because of tokens and all these possibilities of do things with assets that we all common, like digital asset management, portfolio assets, and every kind of things that we have there, banks or the finance sector has got a lot of attention and is starting to put a lot of attention to these applications. And many banks have done things. There are banks that have issued bonds. There are banks that are actually trading. There are banks that are actually exploring, or actually we have like security tokens, exchanges coming in. At the end, those assets there for now are very based on things on the blockchain, but eventually we're going to be able to have tokens or digital representations on the blockchain of actual assets that are on the physical world and the kind of asset we're used to trading with or investing in. So that's probably something just a matter of time. And the benefits of, of tokens and everything is, on ones you have that run on the blockchain, is the fact that you have, it's automated and real-time processing. Even on the enterprise's version of different softwares, you actually do not have to wait that long for like a transactions. They almost real time. Actually, one of the use cases we're going to talk is like things happen in 1 to 2 seconds with banks interacting among themselves. There's a single layer, a single and source ledger that is the source of truth. So instead of having different copies that then you need to settle and double check that everybody has the same thing and everybody has the same information, all that, there's a single source that everybody could trust. So that introduces a lot of efficiencies and reduces a lot of the pressure and the need for settlement and all the process to review whether the information that we all share, that we all are using, is actually matching and saying the same thing. And maybe this is a little bit for the future, but it's a big jump in the experience of anyone who is actually dealing with some sort of an asset, because the liquidity or the way you could trade it or the way you could actually prove your ownership of it is completely different. And it's much, much faster, and actually you're able to do it yourself without actually needing to go to someone to give you a paper that says, oh, I'm here. For example, if you get a degree from university and 5 years later, your employer says, oh, could you please get me the certificate? Or like something from the university saying that you actually got that degree. You don't need that if you have a token that says you've been issued this. You don't need to go and like look for that. And of course, all the issues about intermediation and how information and everything is distributed is completely different. Then, because of this, there's been a lot of different standards that have been issued and started. The most common one is the ERC20 standard that probably all of you have heard of, because most of the initial coin offerings or token launches out there used it, and that's kind of what we're going to use on the demo. But there are other one standards, and these are just some of them. They're for fungible, non-fungible tokens. So everybody knows the difference between fungible and non-fungible tokens? That's yes or that's no? Sorry, yes. That's yes. So okay, everybody's familiar with that concept. So there's a lot of different other standards or standards in work in progress standards that are there, but little by little they're adding like new features to those standards so that they become something enterprises could leverage. And not necessarily standard, especially in the Ethereum ecosystem, it's only to be leveraged on the public domain. It could be perfectly leveraged in the private domain. So not necessarily because these standards are made available on Ethereum public blockchain doesn't mean that enterprises are not actually using them on the private ecosystem that they deploy or create using Ethereum, enterprise Ethereum technology, for example. That's one of the benefits of that technology. So that was a video demo that maybe I'll do later if needed about issuing a bond. So we'll talk a little bit about the use cases. So it's very important that, like I said, most of what we're talking in the enterprise sector, it works with a little bit of a difference from the public blockchain. So one of those is that you have what it's called the public or the single blockchain. That's, let's say, information that everybody on the consortium knows and has. So every transaction that happens, everybody knows that happens. However, that's called the private state, which basically is a second encrypted version, not version of the a second encrypted data database with the data, meaning that only that person who I transacted with, or only with that party that I want to have access to the information, will be able to do that second decryption of it, so that they could access and see the numbers. So I'll be able to send a transaction to, let's say, Marta here, and even if all of you know that Marta and I transacted, you don't know exactly the data behind that transaction, because maybe I'm a supplier, but a lot of you are my customers, and I don't want you to see, the price I'm giving Marta for whatever purchase she's doing, because maybe, I'm giving her the best price or something like that. Or I don't want you to have like additional information to come back and try to drop my price. There's a different thing. So that's there. So the other thing is that even if peers would always have that capacity to check only that data they have access, you could also configure versions of, for example, the network, the consortium leader. If you want, you could have like everything, could see everything. Have even both the public and the private states. You could have that. And a classical example of that would be, for example, a regulator. And the interbank payment systems that we're going to talk, one of them specifically, there is a regulator, which is a central bank, and they want to know everything. So it's possible for them to have it. But despite that, all of these different stages with different peers managing different, having their own ledgers or copies of the ledger, all data is synchronized properly, works, and they don't need to do any settlement, and they could trust the information. Okay, so we're going to see a few cases and based on a little bit of this kind of a framework. So one of the projects that I want to talk about is called I2I, means island to island, individual to individual, institution to institution, if I recall correctly. This is a project we did in the Philippines. So imagine so to give you a little bit of the background of where this happened, so you could kind of understand how it goes, is Philippines has a very high density, have a very big population. But they have a lot of islands. So you have a lot of people that live in the islands. And sometimes, some family member travels to the biggest islands or to the biggest cities to work, and they actually require to, send remittances back home or anything. Or actually, you are employed by a company that is on one island, but you're working on a different island, and you need to pay that system, right? So one of the issues that were happening there is that the rural banks that are mostly available in all of the islands were not connected to the international financial infrastructure, because they're small banks. It's a different setting. It was not worth for them, or they not need it. But so in a way, they were kind of siloed, and they needed a way to connect to each other, because sometimes you want to make remittances from island to island, and you would want to have that, and you are interacting with a rural bank. So what happened here, and this is interesting, there's a Union Bank is the bank that actually kind of put this together, is a bank. But it kind of became, if you allow me the simile, to a central bank for the rural banks. So what actually happened is that all the rural banks open an account in the central bank, in Union Bank, as if it was a central bank. So, and then they get tokens of that money. So if I give you $1 million, you get 1 million tokens. And let's say 1 million pesos, which is the currency there, and you get 1 million tokens. So that you're able to trade and send those to any other rural bank on the system or in the Philippines. And you could be certain that if they get them, they're going to be able to cash out. And basically, at the end of every day, Union Bank is just making, the settlements on the bank accounts. So everything is happening, and everything is there. So this was a very, let me see if I just, yeah. So this was a very successful project in the sense that it gave a lot of benefit to all the players. And this is very important. In blockchain, usually you're looking for the win-win to as many players as you have. So for the individual, it was very good, because now they'll be able to send transactions at a better price, faster timing, because now it happens in, I think it was 15 minutes instead of, I think it was a matter of days, and several days, even a week before. For the rural banks, now, it's more business. Now they're able to actually do a little bit more of services and actually send money basically to all the country. And for Union Bank, it was a very good thing, because now, they have some money that is on their account that they could get interest on. So it was a win-win for many, all of the players and probably they're there. So basically, to give you a little bit of some senses about the architecture, what happened is that there was a tokenized cash contract that is running on Kaleido, the cloud infrastructure that I mentioned. So all of this is running on the cloud on Kaleido. Basically, they have a tokenized cash contract where all the money is held, and basically where the transactions and the balances of each of the accounts is managed. And through an API, basically, they're connecting to the core of the bank to make all the procedures of the settlements, depending on the different rules that they agree on. So basically, this was a little bit how it happened before, and actually, I was surprised to see that there will be an email involved from the user to like the other bank, so that everything happened and they had everything, to something fully working on a blockchain where, basically what happens is that through a wallet, through a crypto wallet, the rural banks would just be making the transactions from one bank to the other. So that's it. There's a single account for each of the rural banks on the wallet, and you're just saying, okay, how much are you sending to? So the bank just takes the money, has it there, so they have the fiat money, like the physical money, they take it from the person, and they just send the tokens, and they know that that's going to be balanced on the account that they have, right? So it's pretty simple in a way, and it's working. Another project that we did, it kind of follows that logic, but rather than a bank acting as a central bank and rural banks, there's actually banks and a central bank in South Africa. And the logic is very similar. They were trying to see, I want to see if it's true that, if we would put blockchain here, it will be able to handle the volume of transactions and everything. And we want to see like settlement times and like everything matches and that everything is correct before we actually decide to go further on and explore regulation and all the different things. It was like the first early stage of the project. So these were kind of the things that we're looking for. And so at the end, all the banks, so basically, 70,000 transactions were handled in less than 2 hours. 95% of the blocks were propagated within a second, and 99% within 2 seconds. So it's pretty close to real time. And considering all the benefits on the settlement, all the different things that happen there's also benefits there that are important. So this is a little bit of how it happened. And for me, the most important thing that you have here and to understand is that there were many environments. There were people that were using cloud. There were people that were using premise. There were people that were using private clouds. It was all different environments, and all of that was running, and everything was happening, all that. And for those of you who ask sometimes, because that's usually a question we get about the hardware there, I think the next slide is a little bit more, but we're talking about 16 gigabytes of memory, and I think it was 4 processors, and that was like the computers that was running this. So it's not really such a strong computer. I'm not going to say it's like what I have here, but it's not also like supercomputer or anything out there, or like quantum computing. So there were several tests, and for me, I told 70,000 because that's like what made official for, I'm not sure why, but if you see as the number of nodes or banks were being added to the test, actually the number of transactions increased. And the throughput was even bigger. So it was able to process that. It was done in different tests, and it was very successful. And basically, what they were just doing was the same thing. Each bank that already have a bank account on the central bank would just put some money there. The bank account the central bank would just hold that, give you a token's worth of that money. You will be moving those, and at the time that you wanted to make a withdrawal, you would just say, I hold this many tokens, give me that much money, or deposit it on my fiat account. There was a question over there? Yes. Wait for the microphone, please.
Thank you. The question is, let's say, do you also have reference points? What are cost per transactions?
I'm sorry?
What are costs per transactions, transaction costs?
Oh. I don't think they were tracking that, and to be honest, I don't know. But if we were to say 90,000 transactions, considering this, I don't know. Probably we're talking very small number of cents. But because I don't know how hard would that, I mean, how much that computer would have be worth, and processing time. So honestly, we're talking about the system, like putting it there, running. So definitely, I think we're talking about cents, like, and under 10 cents. But to be honest, I don't have that data. I could ask, and maybe tomorrow if you see me around, I'll ask it if you could maybe just, hey, do you have that? And I could give you, because I could just ping the team involved in this project. So now let's talk a little bit about Libra. So before I started, there's one thing that I need to make clear. ConsenSys is not member of Libra Association. This is not an endorsement of Libra. And assessments and opinions are my own. This is very important. And sometimes I get the question, then why is ConsenSys talking about Libra? Because we're Ethereum, Libra is building their own thing. We actually have kind of a criticized, we're like, oh, good for using the technology, bad of how you're planning to implement it. Still very resembles a lot of what the current system looks like or the status quo looks like. It's just that you're taking out of some of the regulators, and just instead of regulators, you're putting private companies, which, depending on who you ask, are more or less comfortable with that. So, but basically, we do it because it's causing a lot of attention, and actually is, I think it's going to have its pros and cons, and that's actually what I'm going to discuss in the next slide. So the things why we talk about it and actually build a course about it is because I think we're trying to take advantage of the hype that is causing, and to raise awareness about the potentialities of the technology. So as you could see, if definitely this is something that that Facebook and the Libra Association and Council make happen, this would definitely could be a very big driver of adoption of blockchain technology. It could actually make it to make it mainstream. That's very positive for the ecosystem in general, right? Also, because the average user of blockchain technology needs to be higher digital level than the average user of almost any other thing on the internet right now. There's going to be a lot of effort to educate that user, and definitely that's going to be positive because it's going to enable more and more people to become familiar with it, and perhaps actually use more other tools out there. And another big issue, or not issue, but it's working on it and it's improving. But another big thing is the UX, user experience, user interface of Web3 applications and the tools that we have. I mean, we're going to see the demos. Most of those are text command. So definitely, they're probably going to do a lot of good work there in the user experience that probably would help set standards that a lot of people could adopt. Or maybe they just piggyback the ones that are already available there, but they're building their own thing. However, there's of course things that concerns, worries, or downsides, or cons of this of Libra. First, there's still a lot of information that's not been defined, and that we need to read the small letters as well. So that's a lot of information there. I mean, there's also, we're missing some players. I mean, all of the members that announced at the beginning, now there's even fewer. There were no banks there. There were no regulators. I actually have discussed this with a few banks, and they were kind of paying attention, but still very conservative in the sense of say something or not, but they're just paying attention. Because everybody knows that this is Facebook. There's definitely going to be a lot of money involved. So nobody wants to miss out, but they're still playing it safe. Then also, what we're saying before is that even if they're using blockchain technology, the initial approach is very centralized, and it lacks a little bit of that philosophy or that of those principles that, at least in the blockchain community, we're trying to build and to put out there. So those are the kind of things that mostly the people worries about, or probably there are more things. But in general, this is the structure of Libra. And of course, the names on the middle, they're completely out of date now. A lot of those people are no longer there. But this was like when they made the announcement, those were like the people that sent us a letter of interest, saying like, oh yeah, we might be interested in this, but they not sign anything, right? So those were the initials. So let me, let's say this is on the left, on this side, these are the users. So the user will be interacting through a wallet. So that has to be approved by Libra Association. All the wallets that are there, so they check that it's safe, that the user, that it's compliant, and all the different things. So it has to be approved, and that's where Calibra, this wallet that Facebook, this new company Facebook created to make that wallet, would kind of be living on. That's their scope, that's their space. They're going to be a wallet. Then you have the Libra core, which basically is where you run, and that's where the blockchain kind of is, and that's where the validator nodes exist. And because not everyone is going to actually be able to go to the reserve and make any changes to the reserve. Only specific people there, which usually are going to be the validator nodes. And so later in the demo, we're going to run Libra Core, so you kind of see what that looks like. And then, of course, there's the console that is made out of these companies that say, OK, and basically it's like every seat has one vote, and the total number of members of the council is the total number of votes, kind of a thing, and that's how decisions would be made. So it's a little bit more of a, I don't know if it's an accurate comparison, but think of it as like the Council of the United Nations, kind of a thing. So the deal here is that each member, for a seat there, you're going to have to give $10 million. That is going to be issued to kind of get the initial number of Libra coins out there, and that they could start distributing them and having that. Because let's say that I'm just going to pick a random number here. Uber has 10, and maybe he gives complimentary to people or something just to get started, whatever strategy, or he could hold for people who wants to buy, and or whatever. It really depends on each one. But you need to do those 10 million investment. That's going to be part of the Libra reserve. And the new fiat currency that people like when they buy, that's where they're going to end up. If you buy, you put money there. Because at the end, this has to be a 1-1. It's not going to be a 1-1 in the sense of 1-1 because it's 1 Libra, maybe 0.9 US dollars at the end, whatever economic unit it's used. But that relationship has to stay the same. So in order to do that, whatever fiat currency that comes in is going to stay in the Libra reserve. And there could be investor and everything. So basically, the interesting part for those who put the money there and everything is that that could be a very big reserve of money that could be maybe invested in very low risk things, and actually you gain interest on. And if it's a lot of money, then you get a lot of money of the interest. So that's also another incentive, or probably some people that maybe want to be investing or be part of the investors. So that's a little bit of the ecosystem on Libra. Then. So a little bit, I want to address, and again, might be the rationale for something like Facebook to launch this. And again, I don't know if this is accurate. So if you believe me, fantastic. If you don't, that's OK as well. So one of the things that we've seen is that the user growth behavior of Facebook is kind of decelerating. Is not growing as much, especially like in Canada. In US and Europe, is not growing as much. It's mostly growing in APAC region or on banked regions. That's usually where they're growing. Also, the fact that Facebook is losing the younger crowds. I mean, this is 2011 data, and you could see there that, so we're talking about people that were that now are probably around their 20s, 25s to 30s, something. They're not really, they left Facebook, and that, if I recall correctly, that trend is still to happen. And more and more I run into people that say, yeah, I don't use Facebook anymore. So they're losing a lot of the younger crowd on this. Another interesting fact here is that those are the main revenue distributions of Facebook. And if you see the green line, that's what they comes in for payments. Which, I would be happy with $260 million in revenue for payments. That's not bad. However, for something like Facebook, that's really small. And if you see, it kind of remains constant in time. It's not growing, but it's not also diminishing. But it kind of stays there on that side, which is, for something as big as Facebook, is very steady. And you could also kind of start to see that, mobile advertising is also kind of starting to decelerate. So for those of you who followed Facebook IPO, they make a very big promise. So probably they're trying to keep up with it. So the opportunities that I see for something like Facebook to launch this is actually, they argue to monetize about Facebook Marketplace. They have like 90 million businesses there. So, they could actually leverage some of that, and yeah, that actually makes sense. But another important thing here that I say is that, the remittances market is about a lot, like $100 billion. And out of that market, like 55 billions is estimated to be remittances fees, exchange fees, and all that cost of processing. So if you imagine something like you are in Libra and you have actually, a bunch of a very big ecosystems where you could actually pay with that, then you could take off transaction exchanges fees, and the fact that it's digital and all that, transactions fees or remittances fees could also maybe not go away entirely, but reduce significantly. So there's a 55 billion market out there for, and again, Facebook has about 2 billion people, and that's significant. So I think that's also something interesting. So again, if Calibra gets integrated, we could actually be closer to something more like Venmo in the US or WeChat in China with Facebook. They could try to become the WeChat for the rest of the world, which doesn't seem like a bad idea. Another interesting, or another part is like, they're trying to say, oh, we could bring the unbanked. And that's another of the statements, strong statement that they have said out there. And so a lot of people say, like, but if they're unbanked, then how are they going to get Libra? How they're going to pay for it and all those kinds of things. And this is probably where the real life comes in place and where it happens. And probably there could be like a merchant in some small country that actually is banked and they have everything. So actually someone who's unbanked is going to say, okay, here's equivalent to $100, give me 100 Libras. And maybe say, okay, I'll charge you a small fee and I'll give you that. So he takes the money, he buys the Libra for you and sends it to you. And that's how someone who's unbanked now has Libra and is able to use that for, I don't know, maybe to send it to someone somewhere else, to buy something. It really depends on how much the ecosystem is grown and developed. But there's that opportunity. Then another thing is, I guess I will explain the MTA example. In New York, when you go on the subway, you get free Wi-Fi. So that's great. But in order for me to get connected, I first have to see an advertising. 15 seconds, but I have to see it. So I'm sure that MTA, the company, is not doing that for free. Is getting paid out of that. So, those models are happening. Like, I reward you with something in exchange of something. So maybe like Facebook could do something like, for example, if you get viral content on Facebook, or if you start developing Facebook exclusively for content exclusively for Facebook, maybe they will reward you in some way, maybe directly with Libra, or maybe there's a secondary token that it's pegged to Libra. We don't know. It really depends on the token economy they decide to implement. But there's an opportunity here for them to incentivize engagement and to incentivize content and all the things that are there. Because a lot of you see a lot of the content that you see on Facebook that actually gets viral are memes and all that. Usually don't live in Facebook. There are GIFs that are outside Facebook, or there are videos that maybe are on YouTube and all those kinds of things. So not everything is from Facebook. So it would be interesting for them perhaps to explore those. So those are some ideas out there. And for the members, of course, there's the fear of missing out, and of course, the potential interest that might exist or they might get from the Libra reserve. And just to closing remark for part one, and we open it a little bit to questions. We're going to have a few minutes for that. The thing that I want to put there is Facebook is not the first who have announced to do something like this. JP Morgan, I think it's over a year since they announced JP Coin. And I don't know how many people are there transacting all that, but I think it was like 75 institutions. And of course, we have the China Central Bank that is going to be issuing a cryptocurrency that's going to be given to some of the biggest companies in China so that they could start distributing it. And it's on test. It's testing. And as you guys know, with everything that is digital, it's not going to be contained to the geographical band limitation. So that's probably going to come out of China. So it could actually become an interesting currency for the whole APAC region in the short run, and maybe actually compete in the long run with the US dollar as the international currency. But those have happened, and even they have gotten their decent amount of media and posts and things on social media. Is not as big as Facebook. And it makes me wonder, if it's all about the technology or it's all about who's behind it. And the fact that perhaps people feel more comfortable if some sort of a regulated entity is behind that, rather than a private entity or a private consortium of entities. So it's just to put that. So this is quick. I'm just gonna. So just 2 ideas when people ask about how to think about blockchain. So one of the things like blockchain applications. So those of you who are not familiar with the concept of blue oceans or first principle design, I totally suggest you read about them. But basically, it's all about really when you think of reinvent or rethink about the experience and actually do something different. When banks introduce online payments, basically they put the credit card, which is a physical thing, analogic completely. There, they actually put the picture there with the numbers, and the experience was basically the same thing, but it was just on your phone. But the exact same thing, they just replicated it. WeChat completely changed it. It's completely different. It works completely different. It's so much smoother, so much better user experience, and you see the adoption that they're driving. So it's very important that when you actually are trying to go to the digital world and you're actually looking for an implementation, that you actually forget about the past. Don't mimic what exists. Think again. When people say, oh, I do this, now I just want to add blockchain to it, not usually a good idea. Because if it's done in a way, not necessarily means it should be replicated as is on blockchain. Then there's other cases where you could begin. Usually you could be addressing industry challenges or things where there's shared processes across multiple players on the market. So clear example like labels, like eco-friendly or certified thing, like a product from somewhere. There's I was working for I was in a advising / training Korean company, and they were saying, oh, what we want to do is or customers could go online for blockchain, and they could check that the serial number is genuine. That is, if you buy a TV, it's actually a TV. It's not the serial number of the TV, but you actually bought like a refrigerator, and that who's the authorized reseller to give you that, so that you could actually, in case of anything with the warranties or any issues, you actually know you're covered. So I said that's very good, but I'm not. If I go to a retail shop and I buy Samsung, Kia, Hyundai, LG, SK, all the different big manufacturers out there, I'm not going to go to each of them, each different pages to check. I just want to go one place. So why, instead of doing it for your products, you make it country level. You talk to everyone. Everyone has their own products there. It's one single experience. You have privacy of your data. So like I've said, it's very important to actually rethink how you're approaching this and figure out the win-win situation there. And of course, everybody knows KYC, kill your customers with paperwork. And so banks are really good at that. And basically, that could be very simplified. And yeah, definitely if one bank does the all onboarding for me, then it's win for the other banks. But as well, if I go to another bank and I do something else and I update my data there, that bank also has it. So it's all benefits for all the parties. And definitely would be a very big improvement in the experience of anyone who's using a bank, and even online banking. It could also be a very significant experience. And the fact that you have to face is that it doesn't necessarily mean that everyone who's in the middle is going to be taken out of the picture. But if you're not adding value significantly, then you might be at risk. And even if they were looking at the crypto era or crypto dollar, or not necessarily, digital currencies are coming. And for example, for remittances, that's a big issue. Because whether it's a crypto thing or not, if the money is digital, you could send it anywhere. Then you don't need to, the remittance systems are going to change significantly. We're a little bit bad on time, so we could just go for questions and answers. And I know that first gentleman over there had a question, and then we could see if there's any other ones, any other question. Just wait for the microphone there. Thank you.
Thank you very much. My basic question is, in the industry level solution, are you talking about a public blockchain or a private blockchain?
I mean, definitely the enterprises are mostly looking to private blockchains, or not private blockchains, private ecosystems running on blockchain technology. And that's, a lot of the use cases I described are running on private ecosystems. So that's possible. However, I do see that in the future, when we have a bunch of different private ecosystems out there, they're going to need to interact. So that's where the public blockchain, I think, is going to become significant as a gateway proxy from private ecosystems. So if like Bank of America in US wants to move an asset from their APAC region, if doing an API or anything, then it's not. That sounds like pretty much what we have. But if you do it, and you kind of make that through the public blockchain, then you would have that assurance of not double spending and all of those benefits, and you also have like security and trust of that information.
Do you see it as an integration process, or do you see it as a publication process? So do you see a new paradigm of where new companies will be facilitating as integrator of public blockchains to private ones and exposing those information? Or do you see that a new framework is going to be established for integrate all of these private to public blockchains?
I don't really, to be honest, I don't know. That will depend. There are some companies that have everything in-house, so they don't need anyone outside to help them. And I've seen that as one of the strategies of the early adopters. And probably there's going to be a bunch of other people who are completely new that are being disrupted, or that they don't have the time, because there's people that have been involved in this since years now. So they have a lot of time already invested in this, that they're not going to have the time, so they're definitely going to need some sort of external services to be able to close that gap. So I don't know what exactly would be the most model. I guess it will really depend on the company, but I see both options happening for sure. Any other questions? Here, and then the lady on the end. Or I don't know where the microphone guy went, so whoever he chooses then. Okay, so here, and then we go back there.
Thank you very much for your speech. I would like to ask about ConsenSys. Is ConsenSys involved anyhow in any project apart from the banking industry? Apart from the projects you mentioned before, for example, in the energy industry?
The answer is ConsenSys, because ConsenSys is the event of CoinDesk. ConsenSys is involved in many sectors: health, energy, real estate. I don't know, definitely we have, actually one of our project has a energy distribution license in Texas, and they're exploring with that. We actually did a microgrid project with LO3 there. We also have a lot of things going on with in the legal side of things. So yeah, we are actually in a bunch of industries. ConsenSys is about close to 1,000 people, and we have offices in 9 different countries, and we have people spread all over the world. So definitely we're working in many industries. So it was first over there, then I'll go back to you.
Really interesting talk. Thanks so much. My question is, Facebook took a very, very aggressive stance at blocking other cryptos and blockchain. I'm really interested to hear your thoughts about whether they really did care about consumers, or this is part of a bigger scheme to promote Libra.
I know they blocked us. We suffered it. We were promoting our trainings and everything, and definitely a lot of that was coming from Facebook. The traffic was coming from Facebook, so we suffered that blockage. I think, to be honest, it was done out of the fact that there were a lot of scams happening, and a lot of people was being involved in scams, and you reach people broadly through social media and all that. So I think, honestly, on that side, they acted on good intentions. However, they both blocked good things and bad things. So I guess it should not have been a yes or no. There's grace in the middle. But so that's my thoughts of it. They did it just out of that because a lot of people were being drawn to ICOs that turned out to be scams, and there was a lot of people that complained, and after all the records that Facebook has with the information leakages and privacy and about. So it felt like that was something that, they could use it to say like, hey, we're trying to do something good and avoid people, fake news and all those kind of things, especially with the elections in the US, the whole Facebook manipulation things. So I think it was kind of in that context. I don't think they did it specifically for any real reason behind it, because honestly, the first time we heard about what now is called Libra, it was even before they blocked that. So they were already having the Libra idea in their heads before that, and there was here.
My question is about the regulations by different countries. For example, India. I'm in US. I can send money to my relatives in India, but my relatives in India who might have their kids, going to college in the US or Europe, they have to go through very strict regulation when they want to send money out, right? Now, with this, how will that play? Because this will be illegal, and the Indian Finance Secretary has actually said that they're going to put a bill in the parliament to basically make all these things, cryptocurrency, illegal. So basically 2 questions. The first question, more important, how they will take care of the regulatory aspects.
Regulation is clearly one of the significant challenges or barriers currently facing the space. I don't think that's only affecting blockchain. It's affecting everything, AI. Any global service is affected by regulation. It doesn't make sense that, in blockchain, I start a transaction in US, processed by a node in China, received by someone in Spain or Nicaragua. Something goes wrong, which regulation applies? It's critical. So I think that definitely there are regulators who are trying to keep up so they don't repeat what happened with Airbnb or Uber, where in specific countries it caused a lot of tension and a lot of difficulties. So they're trying to keep up. Of course, they move at the speed that they move, and that's a challenge. They can never keep up with the space. It's very difficult. It evolves too fast. My personal thinking is that regardless of of blockchain or Facebook or any other things out there, in this digital world that we're going to, where geographical boundaries make no sense, we need an international regulatory framework where it applies to global services, things that run globally. When money is digital fluent and all that, I know that implies a lot of changes about monetary policy and all those kinds of things, so you have to be aware, be careful with. But definitely is needed, and not just for blockchain, for anything that is digital. And I don't know, every time that I have the chance to run into someone from the policymakers and all that, I always kind of try. They always say, yeah, we're working on something, but definitely they're not thinking about international UNIC framework, not EU level and North America level or OTAN members level. No, I'm thinking global level. I don't think that's being yet addressed, and I think that's key for all digital technologies happening to ease adoption, to bring unbanked people, to all the different things out there. It's definitely needed, because I feel like, and personally, and this is personal opinion, I feel like sometimes regulators regulate for that 1 or 2% of the badly behaviors, and the other 98% suffer the consequences as well. But I don't know if that's a good or bad approach. That's how I feel. It's like sometimes I feel like, oh, I do all of this just because somebody, could be doing something wrong, and who, try to be legal and do everything, I have to bear with a lot of friction that is not necessary. So let's see if we can make it to 5. So it's 11:25, if I see the clock correctly. It's 35. Oh, then this stopped them before. So it's 35. So let's be back at 40, because the demos are going to run, and probably there are going to be a lot of questions there, and also something could go wrong. So I'm probably going to need the time. Also, if anyone wants more information about all the educational things and everything, I have information here, and I'll be happy to hand it off. So see you back in 5.